Good evening, everybody. Thank you for coming. We're going to try to get started on time because we want to wrap up quickly this evening and address as much as we possibly can. My name is Noelle Kischer-Lepper. I'm Legislative Liaison with the City of Waukegan. We have three great speakers for you tonight. They'll have PowerPoint presentations. We are collecting questions on the blue sheets in the back because we know some of you will have similar questions. We're going to try to group them together. If any of you saw the, saw the State of the City address, we did that there, and it worked pretty effectively to try to address as many questions as possible. So there are blue sheets in the back and also out in the atrium that you can write your questions on and put them in the jar over on the table right behind the video camera. And you can do that throughout the process, and then we'll call on the appropriate speakers to answer your questions. So we're going to start tonight with Pat Morris, the longtime Waukegan Township Assessor, who will give you an overview of your tax bill. Pat?
Thank you, Noelle. I brought some handouts. It'd probably help quite a bit because when an assessor gets up and talks to you, it's all about math. And then I'm followed by a finance director, and obviously that's going to be about a lot of math too. And I brought some handouts so it'll help you follow along. So if you haven't gotten one yet, they're back on the table. I brought, I think, 4 or 5 pages of things that I want to go through. I'm going to spend a few minutes just giving you some general information, and then probably I have, I think, 5 handouts and I think a couple minutes each, and by the time you walk out of here, you'll all be experts on property taxes. First of all, I'd like to welcome everybody to Tax Night in Waukegan. I don't know if you people realize it, but there's 3 truth and taxation hearings going on tonight. As we speak, the school district is holding their truth and taxation hearing. The school district this year is looking for a 10.3% increase in their levy. And their hearing, I think, starts at 7 o'clock tonight, so you might want to run over there and catch the end of it. Of course, a lot of these hearings only last a few minutes if there's not a lot of people there. The Park District had theirs at 3:45. I think I saw Bill Saraka here, yeah. So the Park District had their truth and taxation hearing today. And believe it or not, Beach Park, the village of Beach Park, has never levied a property tax. And they are having a truth and taxation hearing. I think it's at 6:45 tonight. And their increase in these truth and taxation hearings, you've seen them in the newspaper, black border. They have to put some information in there. The most important information is at the bottom where they say the percentage increase over the prior year. Beach Park's increase is 100% because they've never levied a property tax. So that's going to be kind of interesting how that plays out. But they're having a truth and taxation hearing. So, and then we have our Tax Talk Forum tonight for the city of Waukegan. So it's kind of like tax night around here on the northeastern Illinois. What a boring topic. I don't know if you saw the flyer, Tax Talk. I can't think of anything worse. If you have insomnia, it's probably a good idea to be here tonight. And especially when you talk about property tax, that's unfortunately, because that's what I deal with, that's the most hated tax in America, and it has been, I think, since the mid-'90s in Money Magazine, when they take a poll every year on the different types of taxation and which ones people dislike the most, and it's been property tax for a number of years now. Property tax have held that distinction of being the most hated tax. I do want to say a few positive things about the property tax because I've been working with it for a long time, and there are some positives, but the public does not like property taxes, and there's probably a number of reasons for that. One of them being that the big number hits you all at one time as opposed to a sales tax or any kind of income tax where the money is withheld periodically over time. The disparities, the inequities, which is our side of the property tax, and probably some other reasons too why people don't like the property tax. I would like to thank the mayor and his finance director and the city of Waukegan for inviting me to this. I always take advantage of opportunities to speak to people about property taxes because it makes my life a little easier. One of the biggest problems with the property tax is the misunderstanding and the misconceptions about property tax. And anytime any of us in the assessment profession, not just Waukegan, but my 17 other township assessors in Lake County and 1,400 of us around the state. Anytime we can talk to a group of people about it and try to dispel some of the myths and get rid of some of the misconceptions, it makes our job a little easier. It doesn't make people happy necessarily, but when people are educated, at least they can deal with it better and maybe become proactive about controlling their property taxes, which is obviously why a lot of you are here tonight. One thing that one of the positives about the property tax is the fact that it's a local tax. All the money that you pay in property taxes goes no further than the county building. It's collected there and it's distributed throughout the county. Doesn't go down to Springfield, doesn't go to Washington, D.C. That's a good thing. That's a positive. Probably the biggest positive about the property tax is exactly what's going on tonight and hopefully went on at the school district and the park district and will go on next Monday night when the city has their official public hearing on this. And that's that people have control, better control over property tax than probably any other kind of tax, because the people that administer your property tax are your neighbors and your friends. The people that administer the property tax are the commissioners on the park board, the school board members, the 9 aldermen in Waukegan, the township trustees. It's the people that live in your community, and some of them live in your neighborhood, some are your friends. You can have a say because you can put pressure on them or have discussions with them to try to sway the way they act when it comes annually to them levying the property tax. So that's probably the biggest benefit of the property tax, is the control you have because it's a local tax administered by local people. Traditionally, the assessors, of which I'm one, are the bad guys in the whole thing. And I'm thrilled to be here tonight because for the first time, and I've been doing this well over 30 years, for the first time in those 30 years, and probably 30, 60, 90 years before that, we've seen a drop in the one side of the property tax. Property tax, as you'll see in a minute when I go over the brochure or the handout, is a simple multiplication of an assessment times the rate, and you get your property tax. The assessments have gone up forever because they're supposed to mirror what happens in the real estate market. Well, last year, for the first time that I can remember, our assessments went down and our taxes went up. So the people in Waukegan, you people sitting here, myself, we paid about 1% to 2% more this past year than we did the year before, even though our assessments went down typically about 4%. And that's because the property tax comes from the taxers. The assessor's job is to spread the burden. The burden comes from the aldermen, the city, the school board members, et cetera, those 9 taxing bodies that levy a property tax. They're the ones that put the burden on the taxpayers to pay for the services. The assessor's job is to make sure that burden, whatever it is spread fairly. So this is the first time ever that we get a little vindication here, us in the assessment community, because we've been telling people for years and years and years the assessment is not the key component to what happens to your taxes. It's the tax rate, or the other side, the levy side. And it happened this year, and it's really going to happen next year. This year again, assessments went down in Waukegan. Taxes went up. In 2010, when you get your tax bill next May, depending on what happens in the next couple weeks, your assessments are going down this year typically 11 to 13%. In some areas, maybe 14 or 15%. That's a pretty drastic drop in the assessment. But we still may pay a higher property tax bill. So it's a little vindication for us that we've been saying for years that your taxes don't come from the assessor's office, even though that's one of the biggest misconceptions. Taxes come from the people that levy the tax. For 2010, and I'm going to talk about the handouts I have given out. I've got them color coded, so that'll help me refer to which page we're on. And again, there's a lot of numbers. Don't be intimidated by that. It's really not that difficult. It's a reference. It's reference material for you to take home, and hopefully, when I get done in the next 10 minutes or so, it'll be you'll have a little better understanding how it works. Now, the reason a lot of you are here tonight, and the reason, and again, I'm thrilled. I'm real thankful to be here because I actually was at the November 18th meeting when the aldermen were up here and the mayor talking about what they possibly might do with the property tax this year. And I was chomping at the bit, like some of the people in the audience, to have a say in that. And I was looking forward to maybe having a 2 or 3 minute say on December 20th when they're having their public hearing. This gives me an opportunity to say what I want and then some. So I'm really thrilled about that. I've done a lot of research on this, and because I've been doing it so long, the research is fairly easy for me to do. So I'd like to share some of my thoughts with you on that. I do sympathize with these 9 aldermen and the mayor, because the decision that they're going to make next week is quite possibly the most difficult decision they're ever going to make as elected officials. I guess I should qualify that. I think when one of the aldermen, Larry Tempest, when Waukegan was incorporated in 1859, I guess they had some really tough decisions that they had to wrestle with back then. So, but most of the aldermen haven't been around that long, and this is probably going to be the most difficult decision that these guys have to make, these guys and girls have to make. And I certainly don't have the solutions. I'm thrilled that I'm not one of them having to vote on a levy. I'm thrilled I'm not on the park board having to vote on a levy in the economic climate we're in now, and with property values going down. And one thing from our office, we're in the front lines. The assessor's office, over at the county, there's a treasurer's office. We're in the front lines of this whole thing. Most of the time when taxes go out in May, people don't come here to the city. They probably a few do, but most of them come to the assessor's office. A lot of them end up at the treasurer's office, and we see in our office and the treasurer's office, we see how people are reacting on an annual basis, and it's never pleasant. Nobody comes in an assessor's office happy. Very rarely do we see somebody coming in smiling. Once in a while the mailman is smiling when he drops the mail off, but usually when somebody comes to the assessor's office, they're not happy. And same thing with the treasurer's office. But we've seen how people have reacted over the years, and believe me, it's really been troubling, especially in the last year to 2 years, about people. We're going through hearings at the Board of Review now. We see a lot of tears and everything else. People are really having difficult times, as you guys can imagine. And some of you might be those people that are having difficult times already. Seriously, though, I certainly don't envy the mayor. I don't envy the aldermen that have to make this really, really difficult decision. And I don't have any solutions. I'm going to talk to you tonight. I'm not going to preach to you about what they should or shouldn't do. I'm just going to talk to you about the property tax standpoint, because certainly the city has more income than just the property taxes. That's just one of their sources of income, and that's what they're dealing with right now. So I'm here mainly tonight to give you a little understanding of how the property tax works, and I went ahead and took a liberty. I'm taking it one step further. I'm going to make a projection on what's going to happen to the taxes in 2010, the city and the other taxing bodies, if what the city council is looking at now, if that happens. So one of my last sheet shows that, a little projection, so you get an idea what you're facing here. I'd also like to say one more thing about the city. I've lived in Waukegan for a whole bunch of years, and the city services that we get in Waukegan are unparalleled, probably in Lake County and beyond. So that makes the decision all the more difficult, because I was here on November 18th. I heard the mayor speak about some of these things just as recently as a week ago before a commission that I'm involved with. And those services, which we all enjoy, which have been terrific, the policemen, the firemen, snow removal, from top to bottom, are on the verge of being affected by this whole thing. So the aldermen really have a tough time here weighing what we want as services, what they think we need as services, and also how they're going to hit us in the pocketbook with their decision next week. So with that, I'd like you to take a look at the first handout. I think it's kind of an orange-colored one, salmon one, and it's simple. It's on the top of it. It says the elements of the property tax. Oh, these are colors. Yeah, this one here. There's a bunch of copies in the back on the table. But the elements of the property tax, just real simply, and again, I'm going to go through these things about 2 minutes apiece, and I'll be out of here. As complex as real estate taxes are, and that's part of the reason it's the most hated tax, because it's so complex, basically, when you cut through a lot of the stuff, it's a simple multiplication. Your real estate tax comes from a number multiplied by another number. The assessment multiplied by the tax rate. The assessment, as you can read underneath the big word assessment there, is basically 33.33% of market value. In the state of Illinois, we don't assess a property at its value. A $150,000 home, we assess it a third of that for some goofy reason, but we assess it a third. And then the exemptions are subtracted out by the county clerk's office, and Marty Paulson's going to talk to you about those exemptions in a few minutes. And then you have your final equalized assessed value. You multiply it by a rate, and here it says the rate is the sum of the tax rates of the individual taxing bodies. We in Waukegan and most areas pay to anywhere from 6 to 12 taxing bodies. We pay to 9. The people that live in the city of Waukegan pay to 9 different taxing bodies, and I have them on another list. And then below the dotted line up there is the $150,000 home, which seems like we all latch onto that number. But this is a 2009. This is actual real numbers here. That $150,000 home, when you divide it by 3, you get $50,000. When you subtract the $6,000 general exemption, you get $44,000. That completes the assessment side, times the tax rate, which was 9.588%, which is the actual tax rate for 2009. And you get a $4,200 tax bill. And down at the bottom left-hand corner, you see those 9 different taxing bodies and each of their individual rates. With the city of Waukegan, I added a little something there. I put down how that individual rate was calculated, and I'll get to that in just a minute. So that's page 1. Simple formula, assessment times rate, you get your taxes. The second thing I'd like to talk about is the formula part 2. It's on a gray handout, and it gives the 9 components of a tax bill. And basically, we should all be annually, when we look at our tax bill, we should really look at it as 9 different individual tax bills. You all get a tax bill in the mail, but it's really made up of an assessment times the rate to the city, and an assessment times the rate to the park district, and an assessment times the rate to the school district, et cetera. So there's 9 individual tax bills within that one bill. So that same property, that $4,200 tax bill, is broken down this way, and if you look at the very last column I have here, it shows in 2009 the percentage of taxes that go to each taxing body. And you see there the school district gets about 62.5%, at least in 2009. City of Waukegan, 17%, et cetera. For reference purposes, statewide, I did a little research on this. Statewide, municipalities in the property tax typically get 17.1%. So it certainly looks like the city in Waukegan in 2009 was right on with the statewide average, 17.1% of a tax bill. That's the number statewide. School districts typically get about 60%. Okay. The next handout I have, so that's pretty explanatory. It's just taking the tax bill, break it down into 9 parts. The next handout I have is something that we've been using in our office for 20 plus years, and we get blamed for everything. So sometimes we like to deflect that blame and put it somewhere else. We like to put it where it belongs because, again, taxes come from taxing bodies. So we've done this for 20 years, and a lot of assessors do something like this. They take the actual levy of each taxing body, the dollar amount that they collected, that they levied and they got from the treasurer's office, or from you actually, and we compare it from the prior year to the current year, and we look at the percentage increase. And we usually rank them from high to low, and we bold the ones that are they're higher than the others and stuff. And in 2009, you can see the city took a big chunk. They took a 12% increase in tax dollars they received. But if you look at the other 8 taxing bodies, it look like they should all have halos on their head, all those elected officials, because they're only taking 1.4, 1.0, 0.3%. Well, they're not that holy. They are locked in by tax caps and rate ceilings. The city doesn't have any of that. The city, whatever they levy next week, that's what they get. They could cut their levy in half, they could double it, they could triple it. That's what they get because they're home rule. That's the way the law works in Illinois. The other 8 taxing bodies, and by the way, the city of North Chicago's home rule, I think is Gurnee home rule, Libertyville, any city with a 25,000 population, even Park City's home rule, because they went to a referendum one time and became home rule. But certain municipalities are home rule. They do not have any ceilings on how much money they can collect in property taxes. These other 8 guys, you see that 1.4% for the county of Lake, et cetera, they had restrictions on them. Last year, the property tax cap, which is a law that came about in 1991, I think, limited them to 0.1%, which is the cost of living number from the prior year. And there's some exceptions to that, depending on new property and referendums and stuff like that. But their hands are tied to some degree. So it's not that they're that wonderful of people, those elected officials, and kept their levy down. A lot of them can't go any higher than that. So this year, they'll be able to go a little bit higher because that cost of living number this year is 2.7%. Okay, so this just shows you, and that down at the bottom here, it shows you a 5-year average of the 9 taxing bodies that you people pay taxes to, how much was collected in tax dollars in 2004, which was about $297 million, and how much was collected in 2009, which is $378 million, which is a 27% increase over that 5-year period, which is about a 5.5% a year average that the taxing bodies are taking from the taxpayers, at least in our 9 taxing areas. So we do this little comparison every year. The 4th handout is titled City of Waukegan. And is it blue or? It's yellow, the yellow one, City of Waukegan. And now I want to zero in a little bit because that's kind of why we're here tonight, I think. And hopefully I've given you a little idea. Marty's going to talk a little bit more about how to calculate a tax bill with exemptions and stuff. But here I'm zeroing in on the City of Waukegan. And if you look at the year 2000 to 2010, make sure you don't get carried away with this. At 2010, I hope I bolded it on the ones you got, is projected, the word projected on there. That's not a number that's happened yet. That's just projected based on what was printed in the newspaper, what the city is considering with their levy. But if you look at what the city has levied in all these years, these 9 or 10 or 11 years, you can see the percentage increases. And I keep reading about, and I heard on the 18th about, I don't know, Tina used a kind of a cool word called foregone levy, foregone levy. I don't know if you made that up or if it's a real accounting term. But if you look at item number 5 there, where there was a 0.8% decrease, the city took less in property taxes. That very well could have been an irresponsible act by the elected officials, the city council. And I'm not here to pass judgment on it, but it could have been because they took less than they did the year before. But those other years, the city took an average of 5, 6, 7% each year, which is right on par with the other 8 taxing bodies. The other 8 taxing bodies took an average of about 5.5 to 6% a year if you take a general average each year from 2000 to 2009, which we know 2010 again is just projected. But the city's levies, and I kind of presenting this, it kind of bothers me that there's being some blame put on these aldermen for making the wrong decisions in past years, and they're even beating themselves up about it. And I beg to differ about that. They said they didn't take enough because their levies were too low in the past because it was foregone levies or whatever. They didn't take enough. Well, you can see here they're taking an average of 8.1% a year for those years from 2000 to 2009. And again, that's about what the other taxing bodies were taking. So for you aldermen out there, don't beat yourselves up about that, about you made mistakes in the past. I'm just here about property taxes, and these are factual numbers. You guys did take 5, 6, 7% a year. So maybe, and I probably shouldn't say this, but maybe the problem was spending more than the money they took in the prior administration. I can say that because Bob Sabanjan wasn't the mayor then, and he certainly shouldn't take any blame for that. So maybe that was the problem. But again, this is just property taxes. The city deals with utility taxes and a lot of other sources of income, fees and everything else. But these are the real numbers. The second column just gives you what's happened to our assessed valuation. You can see in the last number in the second column, I'm projecting about almost an 11% decrease. That might be a little conservative. We might lose 12 or 13% this year in assessed valuation because you know what's going on with the real estate market. The housing prices are dropping like a rock. And the city rate then, projected city rate, would probably be 2.85%. Now, if you look at the very top, that's just a simple mathematical formula too. You divide the extension or the levy by the total assessed valuation and you get the rate. So it's a real simple mathematical process. And lastly is, what color is this one, blue? Blue, it just, it's a rate valuation comparison, a rate comparison, a tax comparison, and it compares 2008 to 2010. Again, 2010 is projected. And it also compares the city of Waukegan, a $150,000 property in the city of Waukegan, 2008, 9, projected for 10, with that same property's taxes on the other 8 taxing bodies in 2008, 9, which were actual numbers, and combine the total tax bill. So again, you see that magic number down at the very bottom in the middle, $4,219. It's the same property we've been talking about. But in the upper third, Part A, it shows that, again, it's for 2009, it's that $150,000 property. 2008, that property was $156,000 because our values have gone down. Our assessments have gone down from 2008 to 2009, 3.8% it shows there. In 2010, that same $150,000 property is going to be valued at about $134,000. And when you divide by 3 and take off the exemption, you get an assessment of $38,667. That's again projected. And then you multiply it by the rate. Now the first A is just the rate of the city. It tells you what happened to that $150,000 home. Last year, the taxes went from $655 to $723. The other 8 taxing bodies, the taxes went from $35.27 to $34.95, went down slightly. And again, don't think of these other elected officials as heroes versus your aldermen, because they had the tax cap, and they have 2 things working against them, the tax cap, and they have rate ceilings. Their rates can't exceed certain, when the division is made, the levy is divided by the assessed valuation. If the rate exceeds what the law allows, then it has to be the levy has to be trimmed back. So they had a slight decrease. So your tax bill last year was up about 10, generally about 10% for the city, was down about 1% for the other taxing bodies, and altogether it was about a 1 to 2% increase. Now for 2010, again, this is projected, and this is making an assumption, which I don't know if I should have done or not, but that the city council is going to take action on the 55% increase in their levy, which is what was on the table, what is on the table. And you can see what could happen to the taxes here this year. It could be and this is what you've been reading about in the paper. The numbers that the city's been using are not wrong. They've been saying, I think, a $360 or $400 increase in taxes. And you can see right here from $723 to $1102, that's under $400, so that would be the increase. So the numbers they've been throwing out to you are true. And believe me, I've been doing this a long time. A lot of times those numbers aren't true. When you get government officials, elected officials saying what's going to happen, it's nowhere near what ends up happening. But those numbers are correct. So you can see in 2010, we could have about a 50% increase just to the city. Remember, the city's only 17% of your tax bill. And we probably will have a slight increase from the school district and park district and the others. and maybe even a little more than that 1.2% I'm showing there, because they're looking for more than that, but we'll see with how the cap affects them and the rate ceilings. And overall, possibly about a 10% increase. So I've been told that we are, I know a lot of you turned in questions and stuff. You'll have questions, probably quite a few for the finance director, Marty and myself, and we're going to do those at the end of the presentation. So with that, I'll retire, and I'll certainly be here to answer any questions that you have later on. Thank you.
Thank you very much, Pat. We really appreciate it. The next speaker tonight is the City of Waukegan Director of Finance and Administration, Tina Smigilski.
Good evening. Assessor Morris covered a lot of really good information, so I'll be able to get through this a little faster than I had planned. One of the things that we've been going through this year is kind of talking about how the levy is determined and established for the City of Waukegan. And in the past, the city would not go over a 5% increase from year to year. And according to state statute, if we stayed under a 5% increase, truth in taxation hearings and publications aren't required. So that's why you're hearing more about the taxes this year than you probably have in the past. So one of the first steps that we have is we receive a report from an actuary. And what the actuary does is calculates on an annual basis what the City of Waukegan contributes as the employer to the police and fire pension funds every year. So once we receive that information, we plug it into our prior year levy and determine what our levy needs to be for the next year. If it's going to be 5% higher, then that's when we have to look at the truth in taxation statute, put a publication in the paper, hold a truth in taxation hearing, which is going to be Monday at 6 o'clock, and then also the aldermen had to discuss that in public and determine a ceiling levy, the amount that they can't go above. Because as the assessor explained, we are home rule, so we don't have state imposed tax caps other than publication notice we have to go through. A misnomer that the assessor discussed was that the city controls the total tax bill for city residents. And in fact, as this chart demonstrates, and also this gray sheet that Assessor Morris provided, the District 60 really controls the majority of your tax bill. And the City of Waukegan is 17% currently for 2009, and prior to that was a little bit lower than that. So other districts, the Park District, the county, College of Lake County, the township, all of these other bodies control the taxes as well. And only the alderman and the mayor can control the portion that comes directly to the City of Waukegan. And that's what they'll be voting on next week. Here's that foregone levy chart. What we're talking about here is what the assessor was talking about was total dollars levied. And there's also a calculation that is backed into, and that's your rate. So it's a rate per dollar of valuation. And the City of Waukegan had a rate of $1.18 back in 2000. And even though the dollar amount collected was going up because market values were increasing, the rate was being ticked down every year. And as a result, if we had kept a $1.18 rate instead of dropping it annually, we would have had an additional $7.6 million in operating revenues over that period from the levy year 2000 through 2008. More significantly is the debt portion. The City of Waukegan, like many governments, issues bonds on a long-term basis to finance capital projects, infrastructure, land purchases. And when those bonds are issued or that mortgage is entered into, a tax levy is placed on the books with the county for the duration of the loan. So if it's a 20-year loan or bond issue, the levy is filed with the county for 20 years at the closing of the bonds. And what the city has been doing, we did not do it this current year, which is part of the reason the levy went up 12% last year. But what the city was doing historically was what's called abating a portion of the tax levy. So if the tax levy on file was $1 million, for example, the city was going in and saying, we'll just take $500,000. And every year they were abating back a portion of the taxes that were already on the books they could have collected. So if those abatements for the principal and interest payments on the city's long-term debt had not been enacted, the city would have collected an additional $37.3 million in tax dollars to pay off long-term debt. So the city had much more long-term debt that was being paid for from other resources, sales tax, income tax, and fund balance as well. The city's dependence on tax revenues is illustrated in this chart. Of the city's total general fund, 3/4 of the general fund revenues are tax dollars. The second largest revenue or resource that the city is using this current fiscal year to fund operations is transfers in from other funds. So those are one-time transfers. So of the city's total tax revenues, 73% are taxes. We're taking questions at the end, right? On the next chart, the city's property taxes really have different parts that go into it. There's a portion that's called the corporate portion of the levy, and that's really a catch-all levy that's used for operations, public works, police, fire, etc. There's also the police pension contribution and the fire pension contribution. And if you add those three property taxes that we collect together, 1/3 of all of the city's taxes collected are property taxes. So while the city does have other tax revenues, the vast majority of those tax revenues are property taxes. The general fund expenses for the current year, and I think Assessor Morris brought up a point about spending, for the current year, 80% of our general fund or operating costs are related to wages and benefits. 20% are contractual commodities, and a small amount of that is capital. So in our day-to-day operations, 80% of the tax dollars, any other dollars we take in, go to pay salaries and benefits of the city's employees. 74% of our general fund operations are dedicated to the police and fire departments. So that's police officers, firefighter, paramedics, dispatchers. So almost 3/4 of the resources that are used are dedicated to public safety. The current year budget was balanced in part by eliminating part-time positions as well as vacancies. We had an early retirement program, a voluntary separation plan, and also 2 rounds of layoffs to date. This took the city's headcount of full and part-time positions from 718 to 509 positions in 1 year. In addition, we cut all discretionary spending that we could, and non-recurring resources were tapped. The only new revenues that were put into place for the current fiscal year was a nominal $5 per quarter residential charge for garbage pickup. The workforce reductions were made citywide. However, the most dramatic reductions were made in the non-public safety area. In fact, no police officers or firefighter paramedics were laid off. Presently, 68% of the city's workforce is in the police and fire departments. So what we're looking at now, what's before the City Council, is the tax levy for next year's budget. And in order to fully fund the operations and meet the city's pension and debt obligations, the city's reviewing a tax levy increase for next year. Because of the large increase in the annual amount required for the police and fire pension fund that we're looking at for next year, and also having to pay for our debt, the share remaining for the day-to-day operations for the city and for the library is really what is in play. And in order to have no tax increase at all, which is something that some people are asking about, that would result in dramatic underfunding of the pensions, possibly workforce and service reductions, and further downgrades to the city's credit rating. So what if we don't have a tax increase at all? This would hold the city's levy at $25.8 million. So this would, on the blue sheet that Assessor Morris provided, this would mean that the $723 would remain unchanged. So that's what we solved to. If we do that, the portion of the levy that goes to pay for those day-to-day operations, that biggest bar in the revenue in the tax chart, that would get cut by $6.6 million, or 74%. The library would have a 5% reduction in their funding from the property taxes, or $193,000. And the police pension would go up by $2.1 million versus last year, fire pension $1.4 million, and the bond levy, and those are those long-term obligations that have been entered into over the years, goes up by 49%, or $3.3 million. Because the city entered this fiscal year with a $4 million structural deficit already that was plugged using one-time transfers, we're looking at an estimated $10 million budget deficit if no property tax levy increase is done at all. Some of the things that have been talked about would be delayed snow removal, slower response times for code enforcement, police, fire, and emergency medical services as well. In order to fully fund the city operations, the levy would be increased, and I'm sure Assessor Morris did better math than me here, but it would be the 55% increase, which we're projecting to be about $35 to $40 a month. And that he had on this chart here would go from $723 to $1,100 for the city's portion. If that were to transpire, the portion that goes to city operations would be increased about $4 million to solve that structural deficit problem. The library levy would be held flat, so they wouldn't have any increase. And the police and fire pensions would be funded at the actuarial recommended amount to really bolster them and bring them back into a sound fiscal position. We're also estimating that this would allow the city to maintain service levels that are substantially similar to those currently being offered, and that we would be able to continue with a proactive versus a reactive approach to citizen safety issues. And furthermore, it would be a step toward restoring the city's fiscal health and hopefully get our bond rating back up. We've had 2 bond rating downgrades in a year, and that helps us with future economic development and investment in the community. So with that, turn it back to Noelle.
Thank you, Tina. Just a reminder to everybody, we are taking questions on the blue sheets of paper that are in the back and also out in the hall. So if you have questions that you haven't submitted yet, fill out one of those sheets and drop it in the jar in the back. And we're going to moderate the Q&A session as soon as we're done with our last speaker, who is Marty Paulson, and Marty is the Chief County Assessment Officer.
Thanks very much, Noelle. First, I'd like to make you aware that actually I only brought one little piece of paper tonight, but it essentially will be all the slides that are up here. But Pat brought actually a much nicer publication that the township assessors have related to homestead exemptions, which is in the back of the room, and I would encourage you to take that as well. The Chief County Assessment Office is housed on the 7th floor across the street. We are the office that all the township assessors, like Pat, turn their work over to us, and then we ultimately mail you a blue assessment valuation notice that in most townships they receive in the fall. We also are the office that also serves a dual role as the staff for the Lake County Board of Review. So if someone challenges the assessed value that is published, they come to our office, the Board of Review hearing officers hear their case, and we shuffle all the paper that's associated with that. Our office also provides Pat's office and the other 17 township assessors with an estimate of where their assessed valuation should be on a township-wide basis each year. So when Pat says that valuations in Waukegan Township, I think that they went down about 13% this year. That figure is something that we provide to him, and as Pat mentioned earlier, he's the one that decides how that distribution is going to happen within his jurisdiction. And last but not least, and the reason that I'm here tonight, is to talk about property tax relief, which is really the homestead exemptions, the ability for you as a taxpayer to get some form of property tax relief. And that is provided per state statute to taxpayers who live in their home. So that's an owner-occupied situation. So if you are a renter, you're not entitled, that property is not entitled to a homestead exemption. And we have a number of these now. The first one that's up on the screen is the general homestead exemption. About 190,000 parcels in Lake County receive this exemption out of the 285,000 parcels we have. This exemption lowers the equalized assessed value on your property by $6,000. And that's $6,000 of assessed value. So if you look at your assessment, and let's just say your assessment is $30,000 and that market value would translate into something like $90,000, this exemption at $6,000 is really like $18,000 of your market value. So it's a tremendous benefit, and one that we want to make sure that all appropriate taxpayers have. This is administered primarily by the township assessor. You go to Pat's office, or in Waukegan, because we're here, you can also come to our office to have this implemented, but we really would rather have that activity go through the township assessor, because they are the local finger on the pulse, so to speak, in their local area. The second exemption is the senior homestead exemption. Well, you know, those of us who are AARP eligible would like to have this obviously go along with our AARP card, but it only comes to you if you are 65 years or older. One person in the household would have to be 65 years old to qualify for this exemption. It lowers the equalized assessed value of your property by $4,000. Funny story about this. My cousin came to me and said, you know, my parents haven't been getting their senior exemption for 10 years. Now, you would think that the Chief County Assessment Officer's aunt and uncle would be getting that homestead exemption, and they weren't. So ultimately, I said, well, get them into my office. We can still correct the 2009 bill, and then they can have it for 2010 going forward. So they came up kind of sheepishly and said, you know, we'll get this done. What do we need? And, you know, I told them, and basically what you need is you have to own your home and live in your property, which they obviously do, and you have to supply proof of age. Well, fortunately, I knew they were just a little bit older than 65, but anyway, we get that information from those folks. And if the property is held in trust, we may need some of that information. We also need a copy of the deed. If you come to our offices, we can assist with getting the deed, and so it's really not that painful to go through this process. We have the Township Assessor's Office, as well as our office, administers this. So either location is one that you can go to. There's about 33,000 senior households that get this exemption. It's always been my fear, like with my aunt and uncle who live here in Waukegan, that there are seniors out there that aren't getting this basic benefit. It's now worth about $400 a year. So it's something that's very worthwhile. If you know relatives, please try to check with them and make sure that they are getting this. The other side of exemptions is you shouldn't get them if you really aren't qualified. So if you know of circumstances where there's a property that is not owner occupied and you understand that they're getting homestead exemptions, we need to know that. Pat's office, our office, we need to understand that that's happening. Now, that's to say that you qualify for the exemption by living in the home on January 1st, these two exemptions. Actually, the senior, you can get it even prorated now. But so that's, so if someone was there on January 1st and moved in mid-January, that house still qualifies for that exemption for that year. The next one is probably the most valuable exemption that there is out there for those people who have been on this program. This started in 1994. It's the Senior Citizen Assessment Freeze Homestead Exemption. Our county board's been very active in trying to get the income level moved up on this over time, and that was while Bob's tenure on the county board. The board had some success with this, and they've been a leader in this area. This exemption freezes we keep a frozen assessed value for what the assessed value was on your property essentially when you first qualified for this exemption. So There are people that have been on this program for now 16, 17 years. Again, you have to be 65 years old. You have to have lived on the property that you're applying for 2 consecutive January 1sts. Seems kind of weird, but they want to make sure that someone's been there at least 1 entire year, and that's how they determine that. The total household income cannot exceed $55,000. That's everybody that's in the household. Everybody who qualifies for the senior homestead exemption gets an application for the senior citizen assessment freeze sent to them every year. Our staff is somewhat relentless in trying to track down the folks who have not qualified from year to year. We do send out reminders. Obviously, seniors, it's a little bit challenging sometimes, with health issues and the like, but we do chase seniors who have been on the program before and have not come with a reapplication. We try to contact them a couple of times to make sure they get it. This is primarily administered by our office. We are the ones responsible for doing that. All the township assessors' offices will assist taxpayers with the completion of this application. It's a little bit like filling out a tax return, so it can be challenging, but well worth doing. If values are falling like they are now and you were on the program for a couple of years and your assessed value were to fall down below where your frozen base is for gaining benefit, we lower that base down year by year so that when we get an uptick in the market, you will have benefit from that. So it's definitely worth getting on, even if there isn't any immediate benefit, because I do believe that someday people will get benefit from this. And a lot of people are right now, so if you're new. We've got a number of exemptions that were established by the state legislature about 3 years ago, and one of them is the disabled veterans, or this one was not. This is one that's in place, so hold that thought. Disabled veterans exemption. This is we only have about 20 of these in Lake County, and these are for properties where you have a veteran who's had some serious health issues, and their home has had to be adapted for those to make accommodations for them. So it's a real serious circumstance. So obviously you've had to serve in the armed forces. You can lower the equalized assessed value of a property by up to $70,000, okay, or $210,000 of market value. You've got to have a disability of such nature that the federal government's authorized that payment for the purchase and the construction of that of the physically adapted components. You apply for this exemption through the Illinois Department of Veterans Affairs. Now for the ones that the legislature just put in. The first one is a disabled veteran standard homestead exemption. This exemption can lower the assessed value of a property for a veteran by up to $5,000. You must have a service-related disability, and it must be at least 50%. And you have to obviously have had an honorable discharge. This is an exemption that is administered by our office. The next one is the returning veterans homestead exemption. There's some legislation out there to make this a little bit easier for veterans to qualify for that will be considered by the legislature this year. This exemption, again, lowers the assessed value on a one-time basis by $5,000. All these others are exemptions that can recur year to year. This one is a one-timer. And this exemption is applied for that year that that service person has returned from the conflict. And again, that is something that is administered by our office. The last exemption that was recently provided by the state legislature is a disabled person's homestead exemption. This can be a little bit challenging for a taxpayer to get, but yet again, I think well worthwhile. Disabled persons are generally having to go to doctors. One of the big hang-ups with this exemption is that they've got to get a lot of paperwork from their doctors to be able to qualify, and this is an annual qualification to get this. So it's kind of like when you go to when that person that you know is going to the doctor and qualifies for this, they've got to go and they've got to get their doctor to sign off on their status. So it's $2,000. You've got to lived in the property on or before January 1st. You have to provide proof of the disability, and that can be done through Social Security forms. And again, we administer this at the Chief County Assessment Office. The last exemption that I'm going to talk about is the home improvement exemption. Obviously, when the real estate market is not in a position that we would like it to be in, a lot of us are going to be staying in our homes, and we're going to look to be improving our homes in certain ways. And this is an exemption that benefits taxpayers who do invest some funds into their home. It's not necessarily for things that are just general maintenance, but if I'm putting up a new garage, or I'm putting up a deck, or I'm putting a new patio on, or another room, those types of extra improvements that did not exist in the assessment year prior to the one where they are completed can qualify for a home improvement exemption. A good way to get this treatment is to make sure that you have a building permit, of course, because that's a primary trigger of the assessor going out and checking for that. And it's a maximum of $25,000 of assessed value or $75,000 of market value. This is initiated by the Township Assessor's Office via that building permit that is conveyed from the city to the Assessor's Office. And again, the property has to be the taxpayer's principal residence, and Pat's office administers that here in Waukegan Township. And the last way that people can get, seniors can get some property tax relief is through the Senior Citizens Tax Deferral Program. This is administered by the Lake County Treasurer's Office. A lot of seniors who could qualify for this don't. There's only about 400 of these that are happening in Lake County right now. It's if you're 65 years or older, you can essentially get a bit of a reverse mortgage for your property taxes, so to speak. You can get the state of Illinois to pay your property tax bill with a 6% simple interest. Household income has to be $50,000 or less. There obviously are some people who could very much benefit from this. I know Treasurer Skidmore has always been a bit frustrated by how few he has with as much outreach as that their office does related to this. So, but it is another option that's available to people. So, again, thank you very much for having me, and I'll be hanging around as well to take your questions.
Thank you very much, Marty. Again, if anybody has any questions, get them in the bowl quickly. Dave Motley, our Director of Marketing and Public Relations, is going to moderate the Q&A segment. I see he already has a pretty good stack of questions there. Like I mentioned at the beginning, we're going to try to combine questions as much as we can if they're really similar, so that we can get through as many as we can and hopefully get all of your questions addressed.
Okay, there's some wonderful questions in here. I know you don't want to hear me talk, so I'm going to go through these as quickly as possible, try to get the right person that we have on our team here to address the concerns. I also wanted to point out that we're videotaping tonight's event. We're going to put it on YouTube, and it will be available there as well as soon as we can edit it down and include the slideshow and figure out how we can also include Mr. Morris's color-coded sheets so you can refer to them again when you're watching it at home. So without any further ado, also, Mayor, I want to let you know some of these are policy-related questions. We didn't anticipate that you'd be speaking, but you may be called upon to answer some of these as well. Okay. First and foremost, actually, this may be one that you have to address. In light of the economy, layoffs, and no salary increases, why consider increasing tax rate? Mic like this.
Well, I think that question was answered throughout the presentations as to why we're in this situation. We have to operate at a certain level in government. The only way that we get that revenue is either through taxes or fees. And we don't have very many options as far as how we can grow either one of those. The situation that we're involved in right now is one that was of the making of everybody in the community. It wasn't just the elected officials, it was everybody. And how can that be? Well, simple. You vote. And you vote to put people in office who make decisions on your behalf. And if those decisions are good, we all benefit. If those decisions are poorly made, we all suffer. Right now we're going through the suffering phase. There's no easy answer. There's nothing simple. There's nothing magical in what we're dealing with. We have been looking at communities all over, not just Illinois, but the country, trying to find solutions to the problems that we're dealing with. And nobody has the magic bullet. They're all doing the same things. They are either raising taxes, raising fees, or cutting costs by trimming personnel. If we are forced to adapt to a budget that the aldermen place before us with no levy increase, I will conform city government to that levy. I will have no choice. But we will also look at what other areas can we increase our revenue. Those will include water rates, city stickers, the cost of business licenses, anything where the government sells a product or issues a fee, a license for a fee, those costs will probably start going up. I'm not going to tell you that they won't, because that would be irresponsible for me to do so. But the question we have to ask ourselves tonight, from a policy standpoint, are we willing to push the issue and the easy political solution, which is not to raise our levy and lose 1/3 of our police force, 1/3 of our fire department, 1/3 of our code enforcement, just in general, 1/3 of the people who work for the city of Waukegan? That's a question that we all have to ask ourselves. I can't answer that for you right now. As the manager of this organization, I ask that the highest levy be placed before the people of Waukegan and the aldermen for a very simple reason. I wanted you to all understand what the true cost of government and the true cost of the services you've been receiving is. I am not a person who likes to work with deficits. I learned that at the county, that you pay as you go or you work with what you have. So I will do that. I'm not happy about it. I'm a taxpayer just like every one of you here. I live in a small, modest home over on Walnut Street, 2 bedrooms. It's not very big. But I will also pay for a tax increase just like you will. Am I satisfied with the way that government has been operating and functioning from a financial standpoint over the last 7 or 8 years? No. Do I have a solution and a magic solution that will take place immediately? No, I don't. This is a long-term, long-haul problem that we're dealing with. There are many of you in this room that are of the age that you went through the Great Depression. Everybody knows that's a magic date. 1929. Everything fell through the floor for a wide variety of reasons. It didn't have to, but it did. Bad management decisions. What we're going through right now, compared to that, is nothing. And I have to ask those of us here that are from the neighborhoods, that are interested in what's going on, are we up to the same task that our mothers and fathers went through in those years where the world seemed to be falling apart around them? And the only way they got out of it was World War II. Are we up to that challenge as a community? I hope so. I hope we are. But if the answer is we're going to take the way out where there is no increase in taxes, then my policy that we formulate, and it comes from my office and my staff, will be a reduction in services, a reduction in personnel, and all of the things that go along with it. Tina very briefly talked about what will happen. You have an 8-inch snowfall. We got lucky this weekend. We didn't get hit, but you saw what happened up in Minnesota when the dome collapsed. That amount of snow would take us 4 days to dig out from underneath if we have a reduction in services, in personnel. If you have a neighbor that is playing loud music, and on the other side of town there's a crime of greater magnitude, that crime of greater magnitude is going to be addressed first. If you call code enforcement about a neighbor that's doing something that's against our city regulations, you will not get that call answered as quickly as you are now. It will take days before a code enforcement officer would be able to come to your home and deal with the problem. So I want you to understand very clearly what we're up against tonight. The other problem is deficit. If we don't raise the levy, we will have a $10 million deficit. Our bond rating will continue to grow worse, and we will have more difficulty attracting new businesses and new development to this community. That's the #1 goal of my administration, is to grow business tax base so that we can start to wean ourselves off a little bit of the fact is that we've relied so much on homes and home building in this city for years. So as a policy, it's straightforward. I will work with what I have. And that's a decision you have to make and let your aldermen know how you feel about it.
Next question is the levy increasing? Oh, is the levy increase going to be voted on? If so, by whom? I know that Tina talked about that there will be a Truth and Taxation hearing on Monday the 20th here in this city council chambers. What time, Tina? 6 p.m. So you can come to that. There will also be Q&A, public comment invited at that as well, correct? It is testimony only. Here's one, probably you could address, Tina. The state, or either Mr. Morris. The state has rules on max tax increase. In the past, Waukegan has gone along with this increase. Why are they now potentially increasing this increase 10 times without a referendum on the election ballot? Similar question to that is, why wasn't this issue placed on a recent referendum since you had known about this problem before? And are the taxes going up, and how much? And when will this tax go into effect?
The city of Waukegan is home rule. Therefore, no referendum is required for a tax rate increase for a home rule entity in the state of Illinois. Municipalities over 25,000 are home rule, or those municipalities that vote themselves home rule, which Park City was an example. I believe the county might be home rule. No? So the city of Waukegan is the only home rule body out of the 9. So the tax cap that was a state-imposed cap applies to non-home rule entities. So that's school districts, park districts, College of Lake County, and those. If they exceed a certain growth factor under state statute, then they have to go to referendum. And that's why you see from time to time capital projects, bond issues, things like that for schools, when the Forest Preserve wants to buy additional properties for expansion and they want to issue bonds, because repayment of those bonds will go onto the tax bill, they have to go to referendum. The city of Waukegan is not covered by those tax cap statutes. That is why it is not a referendum issue. It is simply one of those issues that goes before the city council for a vote.
When would this proposed tax rate?
It is going to be on the agenda for Monday night. There is a Truth and Taxation hearing at 6 o'clock, and that is to provide testimony for those that would like to come speak. And then 7 o'clock is the scheduled city council meeting, and the tax levy will be on the agenda for that evening. The tax levy has to be filed with the county the 4th Tuesday of the last Tuesday in December. So the vote on December 20th would be when the city council would decide what the tax levy for the city is. It'll be levy year 2010. So these would be the tax bills you get next year, not this year.
Thank you, Tina. I believe you could address this one then, Mr. Morris. The city is one of many taxing districts that make up a tax bill. What happens if they all increase their levies as high as your proposal? And also, maybe you can address this when I tried to group these together as best as possible. And also, second to that, how can property taxes be raised when property values have depreciated so drastically?
Yeah, I hope you read that wrong, because you said your proposal. None of this is my proposal.
No, of course.
How can, the first one was, what if the other taxing bodies want to do what the city does, basically, I guess it is. As Tina mentioned, and I mentioned earlier, they don't have the ability that the city does because they're not home rule. Essentially, what happens is on December 28th, which is the last Tuesday in December this year, all the taxing bodies, there's 231 in Lake County, I think, throughout the county, they have to turn their levies in by that date to the county clerk. County clerk gets all these numbers, and then they somewhat sit on them until the assessed valuations are known, which will be in late February, March, probably more like March, after all the appeals and everything are done. Then the county clerk can calculate the rates. And when they go to calculate a rate, they divide that levy, the request for money from those 231 taxing bodies, by the assessed valuation in that jurisdiction. And if that division does not exceed what is the statutory rate limit, again, other than the city of Waukegan, then that's the levy. The levy becomes the extension. The levy becomes the amount they get. If it exceeds that rate limit, for example, let's say the school's corporate fund, and I'm not sure what it is, but let's say it's 0.25. If they submit a levy and it's divided by the total assessed valuation, which is going to be down about 12 or 13%, and it comes in at 0.35, then the county clerk has to trim that levy back so it stays under that 0.25. So that's the ceiling that the rates, each of these funds in the other taxing bodies other than the city of Waukegan, they have that ceiling, so they cannot get 55% as the city can, because the city's home rule. The other issue here is the tax cap, and again, the tax cap is applied to all the taxing bodies except the home rule ones, and I don't know, there might be 10 or 15 home rule communities in Lake County, but all the rest of them are subject to the tax cap, which sets their levy increase at a certain minimum or at a certain maximum, which this year is 2.7%. So, and there are exceptions to that. So most of the taxing bodies will not be able to get much more than 3 or 4 or 5% more this year from their property taxes. And I think, does that answer this? How can property taxes be raised when property values have depreciated so drastically? Well, property taxes come from levies, not from assessed valuation. And let me give you an example. If let's say the assessors arbitrarily, let's say we get orders from Marty Paulson to say cut all the assessments in half, which he doesn't have the legal power to do that, but sometimes he might think he does. But if he said let's cut the assessments in half this year, and we do that, so the assessments are half of what they were, if all the taxing bodies, these 9 taxing bodies, levy exactly what they did the year before, then the taxes are going to stay the same. On the other hand, if we decide or we get an order from somebody to double the assessed valuations, we double them. If all 9 taxing bodies levy the same amount, taxes are the same. Nobody's taxes go up, even though the assessment doubled or was cut in half. So, and that's factual. So what that tells you is taxes come from what the taxing bodies do. In this case, this year, assessments are going down. Waukegan, throughout Lake County, probably throughout the entire country, except for maybe a few pocket areas, assessments are going down. But that doesn't mean taxes are going down, because it depends on what the taxing bodies do. So even though, as this person asked, property values are declining, the taxes come from the levies of the taxing bodies. So again, depending on what the taxing bodies do in the next 2 weeks, we may see a tax decrease. I can tell you right now, if your assessment's down 12 or 13%, like most of ours are, you're probably not going to see a tax decrease of 12 or 13%. But you could see a 4 or 5% tax decrease depending on how these levies turn out.
Okay, we also received a number of questions that were related to police and fire pensions, and I believe let me try to summarize some of these, and then I believe, Tina, probably you'll be answering these. So my apologies for paraphrasing some of your questions, but they're all around the same subject matter. What interest rate assumption did the pension actuary use? What is the city's plan to fund underfunded police and fire pensions? And can you clarify why the city what is the city doing to raise taxes so high? I understand the issue is being compliant with state for police and fire pension contributions. The law gives City Hall until the year 2041, so why to come up with a plan for that now? Tina, is that enough info?
Well, let me explain a little bit what goes into funding pensions. There's 3 components to funding an employer-sponsored pension plan. And in the state of Illinois, police and fire pension plans are single employer plans. So that means that the Waukegan police officers, the retired officers, and active police officers are covered by a standalone pension plan for just those participants. Unlike what you hear about on the news with the statewide, there's teachers retirement system, state of Illinois retirement system. Police and fire pension plans in the state of Illinois are single employer plans. So the 3 things that go into those plans are employee contributions. So a portion of a police officer and firefighters' paycheck every 2 weeks, a percentage is withheld from their check that goes to pay for some of their pension benefits. There's employer contribution, and that is what is calculated annually, and that is the employer's responsibility to fund those. And then the third component is investment income. So those are the only 3 things that can fund the Waukegan Police Pension System and the Waukegan Fire Pension System. We do not receive any state revenues whatsoever to fund these systems. However, we are mandated for the funding and the calculations by state statute. So the state General Assembly makes the rules, and then we have to comply by them. So the interest rate assumption that the actuary uses is a 7% annual investment return with a 2.5% inflation component built in. And historically, that made a lot of sense. They invest in a limited amount of equities or stocks, bonds, those kinds of things, and over time, 7% was within a window. In 2009, both pension funds, like a lot of people's investments, took really big hits. So we're kind of seeing a catch-up this year as far as that goes. But the actuarial assumption is a 7% with a 2.5% inflation. Paying off until 2041. So I think the question is about amortization. So just like when you buy a house and your house costs $150,000 and you go to the bank and they pay for the house and you pay them off over 20 years or 30 years. That's called amortization, is spreading out that liability over the life of the time that you live in the house. And our police pension fund's unfunded liability. So if we close the fund today and we had to pay all of the retirees their money, any active employees, give them their money back or any benefits they had, today's unfunded liability in the police pension fund is $65 million. That's not uncommon in the state of Illinois, but it's high. So we're between 40 to 50% funded. We are not trying to make all that up in 1 year. And in fact, the actuary is spreading that unfunded liability over 40 years. So it is being spread out till that target, that 40 year. So 1/40 of that obligation is part of this levy that we're considering, and that's $3.8 million of the $6.9 million recommended levy. 3.8 million of that is related to that unfunded liability, and that's really 1/40th of that, assuming inflation. Well, the employee contributions are set by state statute, and they're 9.125? 9.9 for fire and so they're between 9 and 10% of base salary, so just base salary. The state is looking at some pension reform, and they've done that. It's a bill about this thick. Any of those changes, I don't know if the governor signed it into law yet or not. It did pass the Senate. There are a lot of good things in that. It will cap some of the liabilities. That doesn't take effect until hires after January 1st. So those won't benefit the city until next year's levy. But that bill is a very, very complicated one, and I wouldn't be comfortable trying to address that here this evening. But the Illinois Municipal League, I believe there's some police and fire pension groups out there that might have a synopsis on that bill that would be available.
Do you guys have any plan for next year? The evaluation going to come again?
You know, if you didn't get your question in yet, we're all going to stick around afterwards. We want to adhere to the policy of getting all these questions answered. So if you want to sit tight, we have everyone who's able to sit and talk to you about that. But we want to make sure we get through all these questions as well. So thank you so much for asking that. And I know the team is probably prepared to answer that as well. Well, Tina, you didn't have to go too far because I think this one's for you also. Why did the newspaper report that the tax levy is going from 19.5 million to 39.8 million, and the handout says 25.7 to 39.8 million? She doesn't know that answers that question. Okay, I believe this question would be for you as well, Tina. If you don't raise taxes, won't I just end up paying it in fees? I'd rather pay the property tax because at least it's deductible on my income tax.
Property taxes are tax deductible. That's a good point. You know, that's a tricky question. There are things that, there are other revenue options that we are looking at, and that the aldermen have, you know, asked staff to look at and to consider. So every year it's something that the staff needs to go through and look at. If there's not a property tax increase at all and the property tax stays flat over last year, we will have a $10 million deficit that we're projecting now for operations. So we will have to look at a combination of cuts and other increases. So it's very likely that there would be increases in the area of fees or charges, fines, all of those would be considered.
The next bunch of questions are all related to the use of possible volunteers to help make up some of the shortfall in terms of services provided by the city, including AmeriCorps Vista assistance, volunteers for some of public safety and public works tasks. And also, I believe that this is the question, can we also make your bricks while supplying our own straw in biblical terms? Mayor, are you able to address the use of volunteers and the way we've been able to engage them over the past year?
Sure. Last summer, as many of you know, we had issues regarding the Waukegan beach. And there was a group called, Lisa, the official name was Friends of the Waukegan Beach. And, but we couldn't officially ask them to do anything. And there's a real specific reason as to why that is, and that is terms set forth in our union contracts that prevent us from asking people to come in and provide free labor or work for the city of Waukegan. It's very simple. That's what it boils down to. You know, we had the big issue with the crossing guards. That was because of union contracts, that we were not able to employ crossing guards. Same thing with lifeguards. These are terms that have been in our union agreements for years. They didn't just pop up in my administration. They've been there for a long time. And as we began to have to make cuts last year, we had to let go of all the part-time personnel first. We had to let go of our community service officers. And one of the effects of that was to actually drive up our costs. And I'm sure you're probably wondering, well, how in the heck can that happen? Overtime. Tasks that were done by these other personnel were then taken upon by sworn officers or others, that it drove up our cost of overtime. And it's a real difficult tail to catch when that starts happening. And I will tell you that if we get hit with this reduction in personnel that is possible, our overtime costs are going to go completely crazy. Because you're going to have people working. You're going to have a certain amount of people out there to make sure that we ensure our public safety. And the only way to do that is to have people working extra shifts if we hit that 30% mark. So the costs do go up, even though you lay off, particularly when you lay off non-bargained for, which means non-union personnel. It drives up the other costs. So I just don't have a simple answer for you tonight, and because there isn't one. It's all going to be a complex mixture of personnel cuts, if we're forced to, of raising the cost of your city sticker and other things, water rates, charging you possibly for your water meters. These are all things that we're going to have to look at. We asked all our aldermen and staff to put together suggestions. And we created a matrix of these suggestions to look at what would be the impact on the budget if we did these things. So these are all options that we will be looking at as we go through this process. But again, I don't have a simple solution for you tonight. We're going to act as we are forced to act based on what the legislative body of this city government decides to do.
Mary, I think this next one is for you too. We got a couple of questions related to the casino license for Waukegan, so I'll truncate those as best as possible. Is it fair to say that a lot of hope was placed on the expectations of a revenue for Waukegan Casino, and why did we turn down the casino in favor of tax increases?
Very simple. I wasn't here when the casino effort was started. The casino effort was blown up before I ever got here. Had nothing to do with me. This idea of another license being issued for Park City and other communities, that hasn't gone to the House yet, hasn't been signed by the governor. There are no other licenses. And even if there were, the casino wouldn't be built in time to offset the problems we're dealing with right now. You cannot borrow against projected earnings from a casino. Now, a lot of you may not be aware of this, but casino revenues in the state of Illinois are down between 20 and 30%. The people visiting casinos is about even, but they're spending far less. So relying on that to save us, that's a mistake. It wouldn't have been here in time. Now, in regards to, was all this spending going on hoping the casino would bail us out? Might have been. I'm not a mind reader. I don't know what the alderman and the mayor were thinking during those time frames. I can't say that. I can say, though, that more money was spent than we had coming in. More debt was created while they were lowering your levy. They were creating more debt. That's about as regressive a form of taxation as you are going to find in any environment. I had no control over it. When I walked in, we had hundreds of thousands of dollars of unpaid bills. The garbage company was going to cut us off because we hadn't paid our fees. $1 million check had to be driven up to Milwaukee by one of our personnel to make sure that your garbage was picked up. We got a letter from the state, big red letter from the state, IDOT, Illinois Department of Transportation. We're about ready to cut you off from all of your tax revenues because you haven't paid us what you owe us for work that we did with you on Sheridan Road. So the mistakes compound themselves. And if you're doing the kind of, if you're reducing levies and you're not cutting costs, this is where you end up. in this situation, particularly if you're reducing the amount that goes to bonds and not reducing your debt.
I think that's a good segue into the next line of questioning, Mayor. You may have to stick around. The next questions are related to, is there any way to institute a one-time or temporary levy, assuring the public of a reduction at a later date? And what plans are being set in place so we don't repeat this meeting next year when valuations drop again?
Well, what we're talking about here tonight hopefully only has a 2 or 3 year shelf life. This is not forever. We need to plug the holes, we need to get whole, we need to reduce the deficit, and then in 2 or 3 years, we can see these levies go down. Now, will I be mayor during that time? Judging by the attitude of most of the people in the room, I probably will not. Because I'm going to do things that's going to make you angry. I'm going to do the right things. And we're going to make sure that we institute practices, and we have already instituted practices that are cutting our costs, that are cutting the fat off of this government. Anybody who's walked in this building in the last few weeks, compared to a year ago, will see that we have cut the size of Waukegan's government, and we've been very aggressive in doing so. We've tried to negotiate with the unions to reduce the wages enough to keep everybody, as many people as possible working, and keep ourselves within our budget. We were not successful. We got some concessions, yes, thank you. We got some concessions, but they're not enough to get us out of our problem. They truly are not. And no one is riding to our rescue on a white horse. We can't go bankrupt. We've had some aldermen up here jingling their keys saying, come and get it, state, come and get it. You don't want that. Do you want to live in the next East St. Louis? Is that what we want for Waukegan? To live in a community that declares bankruptcy and says to the state, come and get us. Well, it's not that easy, because I have to tell you, you've got to raise the levy as high as you possibly can first. And you've got to do that for, I think it's 2 years, before the state will even look at you. And then after you've raised that levy, if you cannot make your operations, then the state starts to discuss with you what they're going to do. It's not just that easy as saying, I can't pay for my car, here's the keys. It would destroy this community's reputation. And I, as mayor, don't want to look back 20 years from now and have next to my name, the city went bankrupt under Robert Sabanjan, because that ain't going to happen. And I'm hoping that we all understand what's at stake here. Not only the fiscal health of the city, the safety of the people, the ability of people to drive on our streets, but our reputation as well. If we lose our reputation, we've lost everything.
Okay, Mayor, I believe you may have to stay up for these bunches. Well, we're down to about 3 or 4 more bunches, so if we didn't adequately answer your questions, like I said, we're going to stick around. We've already gone 35 minutes past our allotted time, but we're going to try to stick around as long as possible in breakout sessions and answer your questions as quickly and as efficiently as possible. So, Mayor, the next line of questions are based on what are we doing to attract business to Waukegan, and why don't we get some good business in town to make it nice for people? I don't know about that.
Well, we work every day about trying to attract new businesses to the city. It's a daily task that we're involved in. But, you know, part of the problem is that we don't have anybody in the city that's centrally dedicated to bringing in economic development into the city of Waukegan. That position was eliminated. And I'm going to say it very clearly right here and right now. The alderman may disagree with me. That was eliminated for political purposes. They were going to show me that they could strip off from me the people that we needed to make this city operate. But we didn't quit. We lost her, Robin Shabes, but we haven't given up. We are continuing to work every day trying to attract new businesses. We have a new grocery store ready to come out to Fountain Square. We're working with another big grocery store. We're hoping to bring them out to Lewis Avenue Plaza. We were trying to get them to Belvedere Mall. We couldn't get any cooperation from those owners, so now we're hoping to put them at another location. We have several new factories that are coming to Waukegan. We are looking at the potential for selling the one great assets that we well, yeah, that was a subliminal kind of thing. Assets that we have, which is our water. We have the best water in this region, and we only use 35% of our allocation. Right now, we are in direct talks with parties that I cannot identify about the possibility of selling our water to other communities to the west of us, and looking for partnerships to make it happen. There are other things that need to occur in this government if we're going to keep it going based on the funding levels that we're looking at. Privatization is one of them. It's going to happen. We have to look at how can the outside corporate world become our partner and make sure that you continue to receive the services that you receive now. Now, we're not talking about Chicago, and we're not going to make the same mistakes as Chicago. They blew it with their parking meter deal. They spent all that money up front. The Skyway, another bad deal. We won't do that. We're not going to sell out Waukegan. We're going to help Waukegan become more financially viable in doing so. But we meet on a regular basis with partners that we think can help move the city forward. And we're never going to stop doing that, regardless of what the budget is. We'll still have people here who want to work and bring business to the city. Are we always successful? No. There's a lot of frustrations in our downtown. Look at the building across the street from the Genesee. It's known as Academy Square. We were this close to bringing in a major restaurant chain. This close. Great restaurant. The owners of the building began to have financial problems, began to go into receivership. It spooked the chain that was looking at coming here. And they turned around and put their hand out and said, we need $800,000 from the city of Waukegan up front, in addition to other TIF and other sources of assistance. We couldn't do that. We didn't have it, and we weren't going to do that. We do have some new restaurants coming into downtown. The fate of the Genesee Theater hangs on this levy. I'm going to tell you right now, the truth of it is, if this levy goes through with no increase in it, I don't see the Genesee Theater being viable any longer. And we'll be left with two choices. We close it or we sell it. We can't continue to operate and run the Genesee Theater, paying the money that we do in support payments for a company that was given a contract that was by and large never even read by the city. And now we're tearing the contract apart, making sure that the city's best interests are represented there. But in the end, it does come down whether we have the money to pay them. You know, you got to know, the contract was written so if they made money, we gave them a bonus. If they lost money, we made up the difference. Who in the world adopts a contract like that? This city did. But under my administration and with my staff, we're ripping it to pieces. And we're making sure that they are more responsible. The new contract's going to require, if it goes through and we're able to keep the theater going, new contract's going to require 150 shows a year. And bringing people into our downtown and expanding the demographics of the people that are attracted to the theater. But that's still no guarantee of success. Because I got to tell you something. And this is going to get you really pissed off at me, and I'm sorry to say this. But the people of this city have disengaged from being part of Waukegan for a long time. We've given up on being part of something. We had our Christmas celebration downtown a week ago. We lit our Christmas tree, little tiny Charlie Brown-esque Christmas tree, but it's ours and it's going to grow. We only had like 40 people down there. What is that? And why is it only 13% of us turn out to vote? What happened? Where did we give up on ourselves? Where did that happen? As a Waukegan resident, it's heartbreaking to see this going on. We cannot quit on ourselves. And we've got to get ourselves out of the situation we're in. It's going to cost us some money, short term, but in the long term, we will be a healthier community if we make the hard, unpopular decisions that are before us.
Thank you, Mayor. I believe you can have a seat. I believe we're going to wrap up. Again, thank you for coming tonight. We do appreciate it. We're all going to stick around. If we didn't get to your question as efficiently and as effectively as possible, don't hesitate to come up and see us. And thank you so much. We'll probably see you at the City Council meeting on the 20th.